I think as a business owner, it's very difficult to go from being kind of a one-man band or with a few employees to like a medium-sized company. Delegating is the key thing. A lot of my first employees were people that I used to work with. My old boss that worked for us as well. An investment portfolio should be looked at over the longer term. Obviously increasing in value, but there will be times when markets do go down. Clients who tinker the least usually make the most money. Our role as advisors is really managing people's expectations and natural urges.
So we're here today with Ryan. He welcomed us in his office in Villeneuve-Loubet.
Thanks for coming.
Do you pronounce it as Villeneuve-Loubet?
Mine's a bit more English, so Loubet.
Great. Well, thanks for welcoming us, first of all.
No problem at all.
Yeah. My question, how'd you got here?
Yeah.
You've been sitting here for 7 years.
7 years.
Yeah.
So yeah, we've been in Villeneuve-Loubet for 7 years in total, but in France for nearly 10 years. Before we were in Mougins. But yeah, how it came about, I suppose Harrison Brook really was, I worked for a private bank in Belgium and the Netherlands, and we created the Harrison Brook website. Really, it was more digital marketing led, really, to generate inquiries, which I would then do the advice under the private bank I worked for, and then I noticed that it was starting to take off, and then I went independent then after that point, basically. So at Harrison Brook, we plugged into a wider financial network for kind of licensing and compliance purposes. And it's gone from there, really. That's how we've grown, and still now, really, the main source, I suppose, for inquiries for us is still digital marketing led more than anything else, really. So blog posts, Google ads, that type of thing.
Yeah. Oh, that's great. And you do expat financial advice, is that right?
Exactly.
It says on the cup.
Exactly as the coaster says. Yeah, so we're advising usually clients that are living outside their country of origin. So that might be someone moving to France for retirement. It could be someone taking a work contract for 3 years in the Middle East and then moving somewhere else. So anyone who's transient or moving around a lot is our clientele. And that includes in the UK, in Europe, in the US, and in a lot of areas as well on a reverse solicitation basis if they're, I don't know, it could be on an oil rig in Africa, for example, or anything. But usually Brits, Americans, Scandinavians, Dutch nationals as well. It can be from anywhere, really.
All right. And how does it work, if I may ask? So is it you invest their money or you want to give advice? Or? Yeah,
so basically a lot of time people come to us with, if they've worked abroad, they might have lots of different pots of money in different countries, and it's best how to manage those as, say, a French resident. Now they're retiring here, for example. Or they might have old UK investments like ISAs, which were tax efficient for them as a UK resident, but now aren't tax efficient as a French resident. So we kind of work in conjunction with making things more tax efficient for people at the same time as restructuring and simplifying what they've already got, basically. Yeah, and that it really involve, I suppose, investments, pensions, insurances, and mortgages, basically. Yeah.
Makes sense. And just, sorry, being very nosy, but
yeah,
I'm wondering because I'm not very experienced when it comes to investing sorts of things, but I do have some references that you make a certain amount of interest on an annual basis.
Yeah.
So I immediately start wondering, how does a company like this make money?
Yeah, sure. No, it's a really good question. And I think there's two ways that a financial advisor can get paid. Is they can get remunerated from the bank or institution that advisor introduces the client to, which is what we call commission-based advice. Or they can be a fee-based advisor like us. So even though we can take commissions in France, we've chosen to only really operate on a fee basis entirely. So it means if someone was investing X amount of money, we would charge a transparent advice and setup fee as an initial advice fee, and then we charge a management fee for looking after them as a client. So included in that fee is really telling you really what to be invested in. We would advise you rebalances, when to make changes, for example, if you need to build that into kind of any estate planning and that type of thing are all included in that ongoing fee. Whereas obviously if a commission-based advisor, you would just really, they would open an account and then they wouldn't really provide that much ongoing service because they've been paid for that account opening, which is... So yeah, ours is very much more a holistic, ongoing financial planning, more than anything. Yeah.
Sounds good, I do still have the Wolf of Wall Street kind of practices in my head. So.
Ours is a little bit more boring than that, sadly, So we're not really day trading. We run kind of risk-graded model portfolios, so... we're just buying kind of mutual funds and ETFs that people are usually holding for the longer term. We do have clients who do more day trading and they may pick investments themselves, but we wouldn't be advising them in that case. They would be just executing early.
Yeah, because I can imagine, speaking about that, which is something you don't do, but I think that the brokers are really focused on making you as straight as much as possible, right? Because they earn a lot of money during the trades, so you get brokers who are on a commission basis where they get the more transactions you do, the more fees they earn. Whereas with us, it's not the case. Our fee is we charge 1% of what we're managing. So included in that could include as many changes as people want. We don't get paid what we call kind of load fees or initial fees or exit fees or anything like that. But in the past, advisors would have been paid like that. In France, the model is still like that. But given the fact that we're dealing with clients cross-border, so US clients, if they're operating on a kind of a whole-of-market basis, they're usually fee-based. In the UK, commission's actually banned entirely, so you can't operate on a commission basis in the UK, and the same in the Netherlands as well. All right.
Yeah.
I have no idea, but you say so.
Sure.
Yeah, all right. And how do you deal with... expats, they are based mainly in France, is that right?
No, they're all over the world actually. So we have numerous licenses depending on where a client is resident. Will determine which license that they fall under. But we try to cover most major markets. So obviously we're here in France because a lot of people choose to retire here, but they may have made their money outside of France most of the time, which certainly helps from a tax perspective. And then they're purchasing here for retirement. We get clients that, particularly I mentioned that we deal with quite a lot of Americans that have moved to Paris as well for retirement, or they may be moving for a few years to experience living in Europe as an example. So you'll find with Americans, they have even more limitations in terms of banks not wanting to work with them and so on because of the reporting requirements for Americans. And obviously now, post-Brexit, it's a little bit more complicated for British people too.
Yeah. And would you say your clientele are more Brits or Americans?
Yeah, so originally our focus has been British nationals in the past, but it's not really the case now. I would say it's really any English-speaking expat, I suppose, is really our target market. But we do have numerous nationalities in the office that speak numerous languages as well. But Brits have been our main focus historically. That's probably become less and less a little bit now with Brexit. But I think that will probably pick back up again as rules and regulations and processes are becoming a bit more streamlined.
Yeah, great. And for your business, you've been here for 7 years. Is that how long you've been working with Harrison Brook, or was that the
whole time with Harrison Brook? So originally Harrison Brook was set up as a UK business, and then we opened a French branch, for example. I've then operated under the French branch, where I met my wife as well. So here for the long term for sure,
And for your team, how do you say it? Because I find it personally quite difficult to work with, I don't want to say difficult to work with French people, but I find it more difficult to work in France.
Yeah, sure. So operating in France as a business, and all our advisors are employed, they're not self-employed. I know I see it a lot with estate agents where they're all kind of auto-entrepreneurs and so on. Yeah. Obviously all our advisors are employees of Harrison Brook, so obviously that does bring a lot of cost as well here in France, but because we are fee-based, our ongoing fees are really crucial for us being able to scale that business. So the more money that we have under management allows us to take on a gradual basis more financial advisors, and obviously those financial advisors will onboard more clients too. So that kind of fee model, rather than taking commission, has allowed us a slightly more sustainable business in France, given the fact that there are kind of impo costs and URSAF fees and so on to pay for. But I must say it is a lot more difficult, I would say, than operating a business. Obviously, I lived in the Netherlands before, or in the UK, given the fact that there's a lot more barriers really to jump through and hoops to jump through in the French system for sure. Yeah. But I think once you've got your head around it, and everyone understands the system here, and you work with a good accountant as well, I would suggest, it does make life a lot easier then.
Yeah, I can imagine.
yeah, for sure.
Yeah. And when you moved to France and you set up the business here, how would you take it from? Obviously, you work on a fee structure, so you do have some recurring revenue.
Yeah,
but
we do,
personally, I find it very difficult to outsource and delegate work to. Do you have any?
Yeah, so
generally speaking,
I found that very
start?
Yeah, it's a really good point. I think as a business owner, it's very difficult to go from being kind of a one-man band or with a few employees to like a medium-sized company, which I'm trying to get us to. Right. So we are into double digits in terms of the number of people that we've got, but I probably still keep a lot of control myself. I still manage clients myself. So it does make a tricky situation when you're trying to run a business, manage clients who I've worked with for upwards of 10 years as well. But I think delegating is the key thing. I have personally found that quite hard to do because it's giving that control up and then trusting other people to make sure that they do it. But in all honesty, I think that comes down to having good staff and them understanding your business and expectations and business model and service levels and so on. Because all that feeds into keeping your reputation as good as possible, you know. Yeah. Now everyone can review anybody online as well, so... Yeah.
That's absolutely right.
Yeah, exactly.
And do you still remember what was the first kind of employee that you hired? What kind of
of course. Yeah, so a lot of my first employees were people that I used to work with because you already know them, you've already worked with them. My best friend and best man was an employee of ours. He decided to go off and do his own thing, and we touched on this before when we were speaking before the video, that advisors often have the relationship with clients, so they may look to go on their own. And what to do that in France is incredibly difficult and expensive, you see, because of running a business is very different than just managing clients.
But he was an advisor.
Exactly.
As well.
Exactly. Yeah. So he was an advisor at the previous private advisory company I worked for. Even now, I've got my old boss that works for us as well.
Oh, really?
Yeah, exactly. So. It's kind of was initially mainly people I already knew in the industry. It's broadened out from that now in terms of recruiting people locally. I think post-Brexit has made things a lot more difficult because we are very British focused, dealing with British pensions and investments. But to employ people from the UK now, if they don't have a European passport or a visa or carte séjour and so on, we have to go through quite a detailed process of advertising the job in France through Pôle emploi, and I think they've changed the name of it now. But and then obviously applying for visas and so on is time consuming and expensive. And if they don't speak French, there's complications there as well. So it has certainly made the kind of the pool that we can recruit from much smaller. But yeah, we're trying to run a very kind of small but effective kind of boutique wealth management company compared to some of the bigger firms, which most people in France would probably use their bank or potentially a private bank in Monaco.
Yeah. And may I ask how many people do work here?
12 in total.
12 in total.
Yeah. So not everyone's based in the office. Some work remotely as well, but the bulk are based from here.
Yeah. And does that include people that do the investments or manage the portfolios?
No, so our investment manager, we use a third-party company that manage our model portfolios, who are UK FCA regulated, so Nick is based in the UK. They're obviously all the advisors, we have input and we sit on an investment committee with Nick in terms of the underlying investments. Obviously, the advisor has the remit to use other investments outside those portfolios as well. But as a business, we obviously have criteria that we adhere to in terms of what we would invest client money in or not, realistically speaking. Yeah.
How does that work? Because you manage that money for your clients.
Yeah.
that one, you really have to trust that third party, I'd say.
Yeah, that comes with relationships, really. Obviously, we have, so there's lots of different investment banks that operate different investment funds. Nick's role is to select really which investments to use to make up that portfolio. Right. And if the key thing as an advisor, if someone is cautious invested, we have to mirror those investments so it behaves exactly in a cautious fashion. You can't have someone who's a cautious investor invested in high risk equities because it's entirely outside their risk level. So risk is actually a very important thing under our regulations as well, making sure that our portfolios meet and perform in line with someone's risk, and that is obviously increasing in value, but there will be times when markets do go down. So obviously someone who's cautious should have a much less of an impact than someone who's aggressive, for example.
But you would have to learn how that all works in detail as well, right?
Yeah, so as an advisor, we obviously understand all the portfolios. Even if we use a fund manager, a separate fund manager, we still obviously speak to them on a regular basis, make sure that fund is doing exactly what it's meant to do. There's different types of investment funds as well. Obviously, you've got mutual funds, which are typically actively managed, so they're quite for that, because someone's actively managing that fund, they do charge more of a fee than someone like a Vanguard exchange traded fund, like an ETF, where they're very low cost, but they just track an index, for example, like an S&P 500 tracker. And there's always a bit of a debate that often the trackers can actually outperform someone who actively manages it, because a human can also make errors, whereas something that simply tracks something you'll get the pure performance of whatever it's tracking, basically.
And because I'm not very familiar with all the terms, I heard ETF, I heard
so
some other fancy terms, but how does that work?
So say, for example, you just want to track the FTSE 100, which is the top 100 companies in the UK. Right. An ETF would just literally track those, and for that, they would charge a very minimal fee because they're not doing anything too complicated. Whereas if you used
which you then, sorry to interrupt, but do you then actually own the stocks of those 100 biggest companies?
You do through the ETF. So that ETF would buy those 100 companies, for example. You would just pay one fee to buy one ETF. Rather, you could manually buy all those individual equities, but it's actually much easier to do that through an exchange-traded fund because it's much cheaper way of doing it. An ETF, the costs are drastically less than an actively managed fund, usually anyway. But some actively managed fund managers will outperform what an ETF can do. Then you may want to use an actively managed fund. It might cost you more, but if the performance is better, the cost is probably worthwhile. But you've got lots of actively managed funds where the cost is higher, but the performance isn't, you see. So we have a bias towards using low-cost ETFs in our model portfolios and actives where it's suitable to do so, and they're generally providing value.
What kind of returns are you looking?
So in a balanced portfolio, we're looking at achieving consistently between kind of 7 to 8% per annum. That's an investment portfolio should be looked at over the longer term, so really kind of 3 to 5 years plus, because you're going to have years where markets are down. If you take 2022 as an example, equities, bonds and debt were all down, realistically speaking. I think that was the fourth time in history that equities and bonds and debt dropped at the same time. So there will be periods of time where an investment will go down, but that is actually really just normal. Investments, if you take an equity portfolio, over 100 years, it will have several drops within that. Clients who really make the higher returns are the ones who actually do the least changes, in all honesty, and they hold investments over the long term. So we were talking about our children before. One of the best things you could probably do is buy an S&P 500 tracker for them and just keep it for 25 years. But the problem is human nature creeps in. If things go down, people get panicky. They might want to make changes, for example. As a business, we do make tweaks as well, because if an asset starts performing outside of what we're expecting, we may make changes then as well. But in all honesty, after being in the industry for nearly 15 years, clients who tinker the least usually make the most money, because market drops are part of the norm, realistically speaking. So 2022, we had the COVID boom afterwards. Reality had to bite at some point, and then we had inflation, and that made obviously markets go down, which that's kind of gone away now a bit more. We've had a good run up to Christmas. The beginning of the year has been very positive for riskier assets anyway.
Yeah.
But our role as advisors is really managing people's expectations and natural urges. And I would say my role now has become more like a coach, like a financial coach, and really not just looking at like the performance, but looking at where someone is today and where they want to be in the future and what they need to do to really meet any kind of shortfalls that are expected in the future. And that's what our role really is as advisors nowadays. Money managers, for example, would take more of an active approach in looking at trading for just pure profit. Here at Harrison Brook, ours is much more planning based more than anything.
Yeah. And a completely different direction. But what are your thoughts on the cryptocurrencies? Because I think this morning it was around 70.
72. I
plus,
saw. Yeah. So obviously, as a regulated institution, we can't advise on crypto at the moment. But there are.
We'll cut it out then.
Yeah, exactly. It's there are ETFs that we touched on before that now will buy Bitcoin. So that is going to, and that's why Bitcoin has gone up drastically recently, because BlackRock are bringing in a BlackRock ETF of Bitcoin. So that's going to make. They
are a major investment.
Exactly. I think the biggest investment house in the US. So they're making it more mainstream. So that will open Bitcoin up to more people, the mass markets, including in kind of pensions and investments. So I think you will start to see Bitcoin as being more of a mainstream asset class. To put that into our investment portfolios would be tricky, because it doesn't actually really follow that much fundamentals, I suppose, in terms of norms. Like in our portfolios, you might hold gold as an alternative, and usually if markets go down, gold would go up. Bitcoin hasn't really performed like that. When markets went down, Bitcoin also went down. Okay. So it's I would say Bitcoin in the future could be part of someone's portfolios as some type of hedge, but at the moment it's not so clear what type of hedge it is. It's more just a speculative asset, I would say, at the moment. It doesn't mean that people shouldn't buy it, but I would just say if you are going to invest in Bitcoin, it's probably something that always invest something that you wouldn't mind losing. And also, again, going back to equity investments, it's something to hold over the long term, because if it does go down and you continue to hold it, it probably will come back up at some point, as we've seen recently, which I think it's gone from a low of 16,000 to 72,000. So, it's not part of something that we do directly, but a lot of clients might do that on the side of their advised investments, which would be from us.
And that BlackRock ETF, because that's coming kind of back to a question I previously asked. So does a lot of money flow actually into the cryptocurrency market?
Now through that, yes.
Through that, because the ETF has to buy
Bitcoin
the actual
itself.
assets.
Exactly. So all the ETF is doing is basically just wrapping an asset into something that's easier to buy through more platforms or through more investments or through more pensions. And that ETF just allows you to track the price of that. And I think Bitcoin's always had issues with the risk of like the wallets and the institutions that you're buying the crypto through. So buying it through an ETF would be much more secure because they're daily traded. They're usually issued through a well-known large investment group like BlackRock, as an example. Whereas obviously we saw with FTX, I think they were called, and Coinbase, they've all had different issues with regulation, realistically speaking, because they're usually not regulated, or they're regulated in a very poor jurisdiction. So there's no protection for clients when things go wrong, and we've seen that a few times with the crypto market anyway.
I find it quite interesting because they are after decentralization, but in the end people want safety and
that's the problem with
usability as well.
The decentralization is a positive, but then also at the same time there does need to probably be some type of oversight or some type of vehicle where if something does go wrong, clients do have a recourse to either complain or get compensation, for example. And
how does that apply to you? But sorry for going
no problem.
Freestyling on the cryptocurrencies. It's interesting. But how does that apply for your business? How are your customers protected? How do you protect your customers?
So most of the investment accounts that we use or pensions are always regulated. So they'll fall under the country's own financial compensation scheme. So in the UK, if it was a UK pension, for example, we would be using UK regulated solutions, so they fall under the FSCS, the Financial Service Compensation Scheme. Same if you're using any regulated French product, like an Assurance Vie, for example, they would be regulated under the French system, you see. Whereas if you're using a wallet based out of the Bahamas or Barbados, you could argue that the regulation is a lot less, so they won't have a funded compensation policy or protection if that institution goes bust, you see. So that security is very important, which is basically counterparty risk, the risk that you put your money with an institution that then doesn't exist, which you won't really get through major institutions, so banking institutions or regulated markets like the France or UK, for example, or the US.
I've heard a lot about the offshore type of setups. Does that...
Yeah, so we can facilitate advising in offshore jurisdictions, which historically we would probably class the Isle of Man, Jersey, Guernsey, Luxembourg to a certain extent, but not so much nowadays. But I would say offshore is not really offshore anymore. The reason why that is most of those institutions that operate in those markets have to share information now. So in the US, they brought in something called FATCA, which is basically said, if you don't share information about US nationals back to us, we will blacklist you as an institution. And on the back of that, the European Commission brought in the Common Reporting Standards, which is basically a copy of FATCA, where now every year you'll do your IMPO tax return and you have to declare any accounts that you have outside of France. And the reason why that is those institutions outside of France will report that you have that account, you see. So tax authorities now can just go, well, you've not declared this account and you've got the bank account in the Isle of Man, for example. So I haven't seen it as well organised in France, in all honesty. In the Netherlands, it was very well organised, where you would give the list of your foreign accounts and they would match that up against what's been reported and then cross-reference between the two. And that's really the idea of Common Reporting Standards. So the idea of having a bank account offshore and not having to pay any tax on it doesn't really exist anymore, in all honesty, because your tax residency will be determined by where you live. And even in France, if you spend more than 6 months here, you are automatically deemed as a tax resident here as well.
6 months and 1 day, right?
Exactly.
So the taxman anyways get
the taxman will get you at some point. So the benefits of offshore has kind of gone away, but offshore can be still useful for clients who may be working in very remote locations. We get clients that might be charity workers or oil and gas workers, and they don't have access to normal bank accounts, so they may want an international bank account in an offshore jurisdiction for their kind of day-to-day banking rather than banking in the country that they've been sent to. So there's definitely still a position or a market for those type of offshore investments, because they may also save offshore if they're banking offshore, and that's the way I see it. Obviously, private banking in Monaco is different. Again, it's still transparent though, but most of the time people might use the banking solutions in Monaco if they're planning on living there, or they might be financing a property purchase, a higher value property purchase in France, and then they may invest in Monaco to open that lending facility for them.
Yeah, because I think Monaco has a sort of barrier to actually get into, right? So
exactly,
if you want to open an account, you need to deposit a minimum of X. Yeah,
usually over 500,000, and obviously you also have to live there as well. Those rules have got more strict as well. So we do work with monogas banks as well, but mainly from kind of a lending perspective. So it might be a higher value client that's asset rich, may choose to use a monogas bank to purchase a property over, say, using a French bank, because a French bank is more concerned about your income, whereas Monaco, they'll look more at your investments and kind of invest in with that bank to be able to then subsequently lend money.
Yeah. So you can use those assets as collateral then?
Yeah, exactly. Yeah. So usually, if an asset-rich person would have more options in Monaco for lending in France than someone who they might have minimal income, you see. A French bank wouldn't really look at them. They're just concerned at your ability to pay, and that's the big difference between the two, really.
Yeah, makes sense.
Yeah, sure.
And for someone, if someone would be looking to start a business like yours or getting into your industry, where do they start?
Well, I think to start a financial services business is quite difficult now. I probably would find it a lot more difficult if I was starting today than when I did. Obviously, we joined a larger network as a business, even though Harrison Brook operates entirely independently and is a French company, because of scale, and you need scale in financial services. So if someone was just wanting to get started on their own, they can go independent, but they might find it easier to join a network like we did, because you basically plug your brand into a much bigger organization, and then once you've got scale, you can always go entirely independent then on your own. But you would have a lot more functions to employ, so compliance functions and that type of thing, which you need to take.
So I can imagine that takes a lot of time and
money. Exactly. But also, like, if people want to get involved in financial services, it's relatively simple here in France. You can sit the investment qualification with the AMF yourself. You don't need to be part of an organisation to actually do that. So you could always do the qualification. If you've got that qualification and you want to apply for a job, people are going to look at you a lot more favourably if you've already got the qualifications, you see.
And what are those qualifications?
So, like, because we're advising in numerous countries, in the UK we call it level 4 qualified, so it's the minimum level that you'd need to be if you were a financial advisor in the UK. Okay. Here in France, you would either do depending what you're advising on with the AMF or ORIAS, which is the insurance regulator as well. In the US, you'd be doing an investment advisor exam, which is called the Series 65. So you'll find if an advisor's operating in numerous jurisdictions, they'll actually usually have numerous qualifications to be able to advise on all those different functions, you see. I would say those types of qualifications just give the advisor the basic level of knowledge. I think a lot more of it comes from experience more than anything.
Just like anything else, right?
Exactly, yeah. It teaches you the basic fundamentals, but it doesn't teach you really to do the job and how to advise people. That comes with experience for sure.
Yeah, great. Yeah. And for yourself personally, when did you come to France again?
So I've been in France for nearly 10 years in total. Yeah. We've been in Villeneuve-les-Bains for 7 years before that in Mougins. Yeah. The main reason I came here actually was just because of the weather, actually, more than anything. And it's a great place to live. There's a huge expat community, which we've seen through the club as well, which is great for the target market of our business. Realistically speaking, we are focused on largely non-French nationals, which in the club is mainly non-French nationals. So it's a perfect fit for us. As we touched on before, France isn't the easiest place to operate in. And in all honesty, that has actually put off a lot of our competitors as well. There's not that many big expat advisory companies based in France because there's language difficulties, higher taxes and that type of thing. So it's been a good market for us. In the longer run, I would like to extend it more. Maybe the Dordogne is a big British expat area for us, in Paris as well, or in the mountains also. So in the future, maybe we'll look to have satellite offices from there to advise more locally as well. Yeah. But nowadays, in all honesty, a lot of time we're advising clients remotely anyway, particularly after COVID. I think it's changed people's perceptions. Before, it was much more face-to-face.
Yeah. And for scaling your business, you would need advisors.
Exactly, yeah. So to scale, we do need more advisors, but to have more advisors, you need more income to be able to pay them, for sure. So it is a slower process, I think, in France, because we have to do it in that staggered fashion to ensure that we're covering it on all of the employment costs. Yeah. I think you see that a lot here, even in restaurants, that you think sometimes they probably should have more staff, but it's hard to do with the additional costs that are involved here.
I think that's generally speaking quite difficult with a service-based business. Yeah,
it is, and I think because our revenue is recurring, it allows us to do it much better than someone who has a business where it's very transactional and you only get one income. I'd find it much harder to run a business like that because you need that consistent new business all the time on a transactional basis to be able to make sure you meet your payroll and so on. You know.
Yeah, because you get It is a fee, but it is it's a percentage.
It's an ongoing fee,
yeah.
So as long as the clients remain ours and they're happy and we're providing a good service, they'll usually remain clients, and obviously our fees would continue for doing that job, basically. Yeah.
Oh, great. Wow. I think we've covered a lot.
Yeah, we have.
Anyway,
Bitcoin and everything.
For you, how would you say, managing your oldest child is?
Yeah, she's 4.5 now, nearly 5. Yeah.
How do you manage being a parent and
it's
a business owner?
Yeah, I think it is tricky at times. I think nowadays the fact that I can do my job pretty much anywhere, and I know we were talking about it before, that you can work from home and so on. I think being an advisor, we're exactly the same. So I think you've just got to adapt around when you get the sleep and you don't get the sleep. And at the same time, I think
you just have to keep going.
Yeah, it's sharing with your wife really, or partner to balance it out really. But it is tricky, as I say, if you're both working. We had that before. You do become much more reliant on kind of creches and schools and after school clubs and that type of thing. So it is a bit of a balance for sure.
Yeah, sure. And your wife, does she work in the company too? Or?
She's not now at the moment because she's about to give birth, but she works in banking too, but she worked for a Millie's bank in Antibes, which was the old Barclays bank. So similar, mainly because she speaks really good English, dealing with it.
She's
their
French,
English.
Right?
She's French, yeah, but speaks perfect English. So in the banking environment, she's dealing with administration, but mainly the English speakers at the bank.
Yeah. And for your kids, do you have anything planned for them too?
Yeah, so we started a kind of a regular savings plan just with our French bank actually for my daughter. I think the longer you've got, the less you can save. That's the beauty of compounding. So as long as you're saving something on a regular basis and you've got time, I do get clients who are very near retirement. And then they go, I need to plan my retirement time. And they've got a very short period of time. That means they have to save a lot over a very short period of time. So I'd always advise anyone, if you're not saving at the moment, start with something small. And then it will soon build up quite quickly. And always save an amount that's not going to impact your life and you won't really notice. That's the key thing. So we work out what someone's disposable income is. And loosely, you could probably save about half of your disposable income if you're completely honest. But you want to be able to save that amount, rain or shine. You don't want to be dipping in and taking it out all the time. It's something you want to be taken, you forget about, and you keep it for the long term.
Yeah, and then it starts generating interest and then compounding
over the long term.
Yeah, over the longer term.
Yeah.
Oh, brilliant! Great advice. Yeah. All right. Well, thank you so much. I don't want to take up more time than.
Well, thanks for coming in.
Yeah. Thank you so much for welcoming us.
No.
It was very insightful. I've learned a lot, and I do have some things to now think of for the future.
Sure.
So we might have a chat afterwards.
Yeah, exactly. Yeah. A lot of time people don't think about it, and that's why using an advisor is quite useful.
Yeah, we'll do. Thank you so much, Ryan, and stay tuned, subscribe. I don't know what you have to do, but we'll see you in the next one.